Hi, everyone. Thank you for joining me here today for the June 12th edition of the housing market in San Francisco and the Greater Bay Area. My name is Susie. I'm a local realtor here, and I am super excited to share with you guys what I've found over the past weeks and the trends that I've realized. So let's get right to it. Welcome again to the week one of June 5th through June 12th
of the San Francisco Bay Area and housing market update. And I am very excited to start talking about this week's update with you guys. So let's get started.
So here's a quick outline of what we'll be discussing today. So just a little bit about myself, and then the key outlook parameters for this month of 2020. The current trends that we're seeing based on macroeconomics, and then the insider scope of realtors in terms of what's actually happening in San Francisco and Bay Area, consumer confidence versus the data behind it, mortgages and pricing expectations, and the amount of supply that we have versus the demand that we're seeing. Next, we'll talk about the market updates based on the property type. So I broke it down by condominiums, single family homes, and multi-units, 2 to 4 units and 5 units and above. The analysis for those, and then eventually the future outlook in terms of the unemployment numbers and the mortgage payments, how it's going to impact the future of real estate going forward. Okay, so just a little bit about myself, a quick introduction. My name is Susie. I graduated at Northeastern University with a doctorate of pharmacy degree in Boston. I started as a managing partner for the Lee Family Real Estate Investments back in South Korea. I was also involved with syndications with families and friends there. And some qualified certifications that I've received include the Graduate Realtor Institute, which is actually one of the highest designated recognition, with only about 15% of all elite realtors nationwide who are designated professionally with this certificate. I am also certified with the ePro by NAR, which basically is the master's for advanced digital marketing. I was born and raised in San Francisco with over half a decade of real estate experience. And I'm described by my clients as being detail-oriented, proactive, very good in negotiations, and having a compassion for constantly wanting to learn and developing myself on a daily basis. Fun fact about myself, I was the first ever Miss Asian Global from 2012 to 2014, a 2-year reign, and I'm engaged in volunteering at great nonprofit organizations, including Miss Asian American Global Foundation, as well as the National Unification Advisory Council for South and North Korea. We are seeing positive signs of improvement. So the economy and the housing market does continue to see signs of, getting better, and particularly in terms of, buyer demand. The labor market impacts continue to shrink while mortgage applications and showing appointments continue to improve. So we do see more realtors are closing deals and basically helping their clients to purchase homes. And all of this is happening against the backdrop of the lowest mortgage interest rates ever. And so, we're still in the midst of a global pandemic right now. And at the same time, we're grappling with the tragedy of loss and the ensuing social unrest. So even as things move in the right direction, the process will be slow. And so we'll have a lot of work to do individually and collectively before we can fully recover. But I did want to point out that, we have positive signs of improvement. Realtors are increasing the number of listing appointments. We're entering escrow and closing sales. The overall economy provides a recovery outlook as businesses are slowly starting to reopen. There is a modest price impact that is defying expectations. And I just want to put it out there that the aftermath of the economic downturn, and unemployment will affect prices. However, it's definitely not in the same trajectory in terms of the '08 crisis that we've all experienced before. And the recovery is on the way, but it will be slow. So to be realistic and frank, the future is still unknown, right? With a lot of factors that we just can't account for, that include, are in the realm of social, economic, and political factors that must play out. So it will take some time as retail spending and GDP continues to unravel over the next couple months, but we are on our way. This is a basic representation due to the courtesy of CAR, CAR, California Association of Realtors, that the jobless claims are still easing. So we did see this spike from the March 2020 data, which was kind of like the primal peak of this whole jobless claim, situation. And we are seeing the numbers, slow down, and they are decreasing. However, we should not ignore the fact that it's still millions upon millions of jobless claims that we have experienced over the past 3 months, which is a very short amount of time. So this is something very important to consider. Next, I just wanted to go over the consumer expectations. So there is a big gap in terms of what consumers are expecting and what the data shows of the pandemic, where a lot more buyers wanted to have a bargain in terms of wanting to find a lower priced property. But we are seeing as time goes on that expectation is going lower. And when they were asked, have any of your home sellers recently reduced price to attract buyers? Yes. So in the beginning, sellers were reducing their price in order to attract more buyers, but right now it is leveling off. The Consumer Confidence Index is also finding a bottom as well. So if you look towards May 2008, January 2009 area, there was that big dip in terms of consumer confidence. And we've really built that up over the past several years up until this past few months, in which it just shot down. And this pandemic, however, we are finding that bottom in which people are regaining confidence that they can buy, and also for sellers that they can sell during this time. There is a lot of unknown right now, so we'll monitor to see how this will actually get resolved. Next, I wanted to go over, what's happening in terms of realtors. What are realtors doing right now? Let's get right to it. So the Bay Area sales do show signs of having a bottom. So more realtors are entering escrow and are closing. And based on the CAR weekly survey, it showed a second consecutive weekly gain in the percentage of California realtors that are entering escrow and closing transactions last week, suggesting that pending and closed sales should increase in the coming week. Also, there was a modest uptick in the percentage of respondents who had listing appointments last week and the number of realtors who listed a property last week, which is a hopeful sign that supply may begin to follow suit. And in terms of the showings that were conducted during the shelter in place in March, especially in San Francisco and the Bay Area, we just couldn't have any showings. So obviously it was very low. There was a huge dip. However, we've regained our momentum again. And once this shelter in place slowly started to ease, we've seen a increase, and actually in May 31st, that was the date that we actually surpassed pre-COVID levels. So if you look at last year's data versus this year's data on the same day, it was actually 2.5% higher than last year. And overall, the change was approximately, close to 10% compared to pre-pandemic levels overall. So we are headed in a positive direction. Pending sales, they're also increasing. So we're getting more pending transactions go through. So that is also a positive indicator. Let's get into the consumer confidence versus data analytics data and what you really need to know. We are seeing fewer buyers and sellers getting cold feet as well. After peaking at nearly 50% of respondents who had a buyer withdraw an offer at some point during the crisis, less than 10% of respondents over the weekend had a buyer who withdrew an offer on a home last week. Similarly, since the crisis began, we saw as many as 57% of realtors with at least one seller that had removed their home from the market. However, 24.2% of respondents had experienced a seller removing their home from the market last week, and these figures remain elevated but show continued progress from mid-April. So mortgages and pricing expectations, what to expect and how does this affect housing prices? Mortgage interest rates hit an all-time low and at just 3.15% for a 30-year fixed rate mortgage, which is, very affordable. It's never been this much as this affordable to borrow money to invest in home ownership ever. And this is undoubtedly, at least partially behind the uptick in demand seen in mortgage applications as well. And given the high cost of housing in California, as well as the challenges many would-be homeowners face in affordability, low rates provide a tremendous boost to the purchasing power of the typical household. So this chart just represents that, the year-to-year change in new mortgage purchase applications. We've definitely seen a huge surge in terms of the mortgage applications, which means there are buyers that are willing and ready to buy now. And in terms of the California mortgage applications, we see a positive sign too. So in California, week ending in May 22nd was 11.6%, and the week before that was only 5.7%. So we're definitely seeing that uptick in terms of the mortgage applications, which is definitely a great sign. And on to the second part. Although the median list and closed prices have remained fairly stable up to this point, the percentage of active listings and closed sales that have been reduced from the original listing price has been rising in the recent weeks, especially in the Bay Area. However, the magnitude of the discounts has been shrinking of late and was between around 3.5% to 4% over the past 2 weeks, compared to 4 to 4.5% back in early May. Still, nearly 2/3 of realtors say that the buyers they spoke with last week were expecting lower prices, and the MLS data suggests that they are finding success of late in getting more sellers to make concessions, although they are modest ones. So in terms of the Bay Area, as you can see, the listing prices are still mostly stable. They did have that dip in the beginning parts of the pandemic, but right now it is leveling off and bottoming out. And in terms of most regions, just all across the board, we are seeing the median closed sale price coming back to what we consider normal. More Bay Area actives are being reduced recently. Like I said, there was that concession that took place between the sellers and buyers in terms of sellers just wanting to sell their property, so they did lower their prices. We've always had this challenge of having a very limited supply versus having a growing buyer demand, especially here in San Francisco and the Bay Area. And so one way that the Bay Area has gotten back to quote unquote normalcy is due to the listings not being available in the market. The average daily new listings have substantially declined in the past several weeks. Right now, we are getting back to what is considered, pre-COVID stages, but there's still a very limited supply in terms of inventory. And, one reason the forecast calls for a slow trajectory for closed sales is that new supply is not rebounding to the same degree we saw with buyer demand. The pace of new listings coming onto the market has been essentially flat or down the past 5 weeks. Thus, even as the economy starts to open and buyer demand starts to return, new supply is definitely and desperately needed in order to maintain an uptrend in pending sales so that closed transactions can actually rise. So now we're going to get into the fun part in which we're going to go over the housing trends and crunch the numbers and really see on a micro level in terms of what the active listings are pending and what all the numbers translate to in terms of total production as well. If you look at this chart, this shows the pending, hold, expired, contingent, closed, and active listings over the past 7 days in San Francisco. The average price for an active listing is about 1.3 million to 1.4 million. The average price for a closed transaction was about 1.5 to 1.6 million. For pending right now is about 1.3 to 1.4 million. The number of listings that are active currently up until today is 175 active listings. We've had 28 closed transactions over the past 7 days. And we currently have 5 that are contingent, 4 that are expired, 1 that is on hold, and 39 that are pending. So we have a total of 256 listings that are showing activity. Compared to the week prior, we've had 131 active listings. So we have more listings this week. 39 closed last week, so not as many closed this week. 25 contingent, 12 expired, 10 on hold, and 43 pending for a total of 260 listings that were showing activity last week compared to 256 this week. And the average days on the market for an active listing is about 19 days. Which is, still pretty good. For closed transactions, it's 21 days. And so, so we're definitely seeing activity in terms of the condos right now. Oh, I forgot to mention that we'll be crunching the numbers and I'll be going through the different property types, in which first I'll go through condos first, as you probably saw in the title, but I just wanted to reiterate that. And this is just a basic summary of the data that I compiled, and it's the comparison versus the week prior, because I did start from June 5th until today, so there is that week prior to that, and I thought that would be a good comparison for you guys to see. Next, let's talk about single family homes. So for a total volume of all these single family homes, we've seen in the past week $376,175,237 compared to the week prior, which is $345,706,999. When we look at the actual number of listings and average days on the market, so we've had 74 listings, active listings this week compared to 44 listings the week prior. 6 listings contingent, which is the same as the week prior. Only one that's expired versus 7 that expired the week prior. 44 that are pending versus 38 that were pending last week. And 35 that have been sold versus 47 that have been sold. So there has been a total of 160 transactions or listings that are showing activity right now versus 143 listings that exhibited activity in the week prior. And here again is a side-by-side comparison in terms of the total volume that you see for the single family homes, and also the number of listings and also the statuses for each of those listings as well. Next, let's go over the updates on multi-unit properties. So the multi-unit properties, we have 2 to 4 units. So we see that the total volume for active listings has been 69,368,950,950. So we see that the active total volume is 669 million. The average sale price for an active 2 to 4 multi-unit is about 2.5 million. And then when we look at the actual number of listings in the average day on the market, we've seen 27 active listings compared to 18 the week prior, 1 contingent, 2 expired, 1 inactive, 3 pending, for a total of 34 properties that are exhibiting activity versus the 35 properties that we've seen the week prior. And we are seeing that the average days on the market for the active listing is about 44 days, which is a little bit longer than you would typically see, which is pretty normal. And let's go over the 5+ units. So for these multi-units, you're seeing active listings going for about $63 million worth of total volume. So a grand total of the multi-units for the 2 to 4 units and the 5 units, 5 and above units together, is approximately $169,321,738, which is actually an increase from the grand total of $148 million for the 2 types of properties combined the week prior. And if we take a look at the number of listings versus the days on the market, we have 13 active listings available right now, 2 expired, 2 pending, 3 sold, for a total of 20 properties that are exhibiting activity versus 11 the week prior. And also the average days on the market for these 5 units and above are actually are actually shorter. So they're about 10 days versus the ones that are pending. They're, it's a lot longer, of 217 days, and sold in 35 days. So that's the average days on the market. So here's another side-by-side comparison for the 2 to 4 multi-units and the 5+ multi-units, just to give you guys a breakdown of the numbers. So now that we've gone over all the data that we have available, what should we expect in terms of the future? And with the unemployment going on and mortgage payments that still need to be conducted, what's the future outlook? So over 40 million Americans have lost their jobs. Despite the ongoing progress in the economy generally, our progress against the virus here in California specifically, or the recent signs that the housing market reached bottom roughly a month and a half ago, the US economy crossed another critical milestone last week, as more than 40 million workers have now filed for unemployment insurance since the initial shelter-in-place orders were issued. So the new claims have been trending downward for 8 weeks in a row, but the toll on our labor market and thus on consumer spending and economic growth overall has been significant and will take time to heal. There's a huge, sector of our economy that, are still restricted in terms of bars and restaurants, retail, arts and entertainment, and other services and accommodations. So this is definitely something to consider. And also, many homeowners are skipping mortgage payments. So if you take a look, there has been that uptick in terms of homeowners skipping on their mortgages, which we will have to see how this will play out in the future. If we have forgiveness or some sort of relief for the people that can't pay their mortgages, we'll have to see what unravels in the future. So some closing remarks. The economic and market data has definitely improved significantly over the last month, but as that short-term shock fades, we've begun to see simultaneously that we're trying to grapple with deeper structural issues in this country. And so it's a real good reminder that those of us in the real estate have this amazing opportunity to help people to realize the American dream of home ownership, which alleviates inequality, boosts educational attainment, improves health, and helps to drive equal opportunity and treatment. However, it's also important to remind ourselves that especially as the economy begins to heal and return to some version of normalcy, that normalcy all too often means that huge segments of Americans do not have access to home ownership historically, and that many still face the barriers to the American dream today. Thank you so much, everyone, for taking the past 30, 40 minutes to learn about the housing market in San Francisco and the Bay Area. I'm open to questions and discussing about the housing market or any inquiries you might have about the trends or markets or anything. I am always up for ears and also to provide feedback. So call me anytime. You can also email me, and don't forget to visit my website at suzieleesf.com, in which I will be posting weekly market updates as well as monthly market updates. And my social media is very vibrant down there. So Facebook, Instagram, LinkedIn, YouTube, Twitter, they all have the same username, with Instagram just having a underscore between Susie Lee and Ari. And other than that, thank you so much for your time today, and I hope you learned a lot. I am very interested and passionate about the real estate market and how it's always developing, and I will be curious to know how you guys think of the market and whether you would feel comfortable with buying or selling in today's market as well. So feel free to visit my Facebook page and leave a comment, or visit my website and leave your contact info, and I would love to talk with you and get to know you better. So thank you so much, and I look forward to seeing you guys next week. Bye-bye.